I talk a lot about investing on a YouTube channel, from real estate investing to stock market investing, which is why if you haven't subscribed to our channel yet, you should do that. But when most people talk about stock market investing, they're trying to find the next hot stock. How can you find the next Tesla or the next Amazon or the next Apple before it makes it big? Now, you can make a lot of money if you find the next hot stock, but that might not be something you want to own for the rest of your life because, well, Tesla could fail, Amazon could go bankrupt, and people might stop liking iPhones. Now, I know what you're probably thinking. Oh, Jaspreet, Amazon can't ever fail. They're a powerhouse. How could anything be bigger than Amazon? Well, that's exactly what people used to think about Sears. Sears used to be the monster retailer, and back in the day, people used to think that there would never be a Sears competitor because they were so huge. Well, now times have changed, technology has changed, and Sears is bankrupt. Companies will change, technology will change, people will change, but one thing, if you believe in the United States and if you believe in the American economy, one thing that won't change is the economy. So if you believe in the American economy, what you want to be betting on is the American economy, because while companies like Sears might come and fail, and JCPenney might come and fail, and Circuit City might come and fail, and Hertz might come and fail, and California Pizza Kitchen might come and fail, the American economy has continued to grow. The closest way for you to get actual exposure to the American economy is to invest in the broader stock market as a whole, and that would be through funds like VOO and SPY. These are two different ETFs, exchange traded funds, which allow you to invest in the broader stock market because both of these funds give you exposure to the top 500 companies in the United States. So both of these funds give you exposure to the S&P 500. Now I want to give you a little caveat here because the United States economy and the stock market are similar but two different things. The economy is the economy. This is our companies, and this is how many people have jobs, and this is how well our economy is doing. The stock market is where people bet their money based off of how well they think the economy is doing. So while they're similar, they are different because when people put their money in the stock market, they're betting that the economy is going to do well in the future. The way you invest in these funds is the same way you invest in any other company. You just go into your stock brokerage and then buy these funds as opposed to buying something like Tesla or Amazon. Now, I should also remind you that when you invest your money, you are never guaranteed to make money. You might even lose money when you invest, which is why you should always do your own due diligence and never blindly listen to a random guy on YouTube. But when you invest in funds like these, now what you're doing is you are essentially betting on the growth of the American economy. You're not trying to get rich overnight. You are just betting on the slow and steady growth of the economy. If the economy is growing and our companies are growing and companies are making more money, well then chances are these funds are going to continue to make you more money too. By the way, if you do want to learn more about how to actually invest your money in the stock market and grow your money and find a good stock brokerage to use, our team put together a very comprehensive article that goes over all of that, and you can read it on our website, theminoritymindset.com, and I'll also link it for you in the description below. The advantage with owning something like this for the rest of your life is now you don't gotta worry about changing trends because, like I said before, companies will change, people will change, and technology will change, but the economy will continue to grow. So as companies come and go, these funds will kick out the companies that are not doing too good, and they will add in the companies that are doing better. So if a company is no longer one of the top 500 companies, it will get kicked out of these funds, and then these funds will add in a new company who is now one of the top 500 companies. Now the difference between owning something like this and owning real estate is with real estate, typically you're investing in real estate for passive income. So you're gonna make your investing decisions based off of how much money you're making every single month. Here, you do get some passive income from dividends, but it's not gonna be as much as the amount of passive income you're getting from real estate. However, you do get the stepped up basis here like you did in real estate. So if you invest $1 million here and over your lifetime this goes up to $5 million, well, you could sell your investment and pay taxes and then give this money to whoever you want to give it to, or you can own these investments for the rest of your life, and if you don't have to use this money and you die with these assets, well, now they can go to your kids or whoever you want it to go to, and they will own these assets, and when they sell it, if they sell it for $5 million, which is how much it's worth when you die, they won't have to pay any capital gains taxes on that. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you gotta do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.